Hey everyone, welcome back to Markets for Millennials and our weekly market wrap. I appreciate you guys tuning in, watching, commenting, liking, sharing, subscribing. I appreciate your patience with me while I've been on vacation, while I've been taking some time away. And what I'd like to do is just get right into it. It's been a while. What I did on all the charts I'm going to show you, except for my FOREX charts, I didn't get a chance to do it. But on the equity markets, DXY, yields, gold, silver, Bitcoin, I have a vertical line. You see it here on the middle of my screen. And the line is to kind of just mark where things were the last time that I uploaded a weekly video. And so what I thought I would start with here is to just show you using the DXY. I'm going to be primarily looking at the daily chart. A couple of times I'll check out a longer or shorter term chart because I want to be able to show you some different trends or some things that I'm watching closely. A lot of things have happened. It's really interesting if you see down here where we were the last time I uploaded a video. You can kind of see how the DXY, which is, remember, around 50% weighted against the euro, has really taken off. And so we're kind of, we still have not, on this bounce, we still have not reached our end of March, beginning of April high, or near-term swing high. And so if we pull back, you still see the dollar is on a very long downtrend. Now I'll darken this for you for a second, just so you could see. This is a trend line that I was watching. Basically when we hit that swing high in late March, I took a line and drew it down here just to kind of see. What I've been doing a lot lately is trying to utilize momentum lines. And what I mean by that is simply when I see a trend, and you can see it here, basically after the last video that I did, the dollar index, I should say, has been on the rise. And so once you get a very pronounced rise, or once you are establishing higher highs, I've been trying to draw in trend lines to track momentum. And so I'll darken this one for you as well, so that you can see here, and then I'll darken this down here because I just want you to see kind of some things I've been doing to kind of track. Since I haven't been making videos, I have been on Twitter just kind of talking about different things. If you're in CTM, then you know I've been occasionally posting in Discord some things I've been watching. But you can kind of see here what happened was, you know, beginning of January we hit this kind of low around 89.20 or 29, 209 I should say, excuse me, and we have not made a lower low since then. We had this little bit of a bounce, higher low, and then we got smacked back down, and then we made this low, which is again not as low as before. We did barely get under 90. And so what I did was I have this first trend line which is connecting these touches, and the most safe bet, now there's a lot of things going on in the DXY. This green support line is a long-term trend line, long-term support going back multiple years. So that's going to be pretty extensive to try to break through to the downside. But obviously, and I am talking about the downside because we are in a long downtrend. But where you have the greatest possibility of success to the downside on this and understanding the direction of the dollar is obviously to break this horizontal support. The next best thing after that is to break this kind of shallow trend line. And then you see these two trend lines to the upside. I'm going to get rid of this really quick so it's not distracting anymore. But this trend line is tracking this lower price momentum. And then I had this really steep trend line, which so basically it's broken into basically three different kinds of momentum. And so what you see here is on my daily chart, let me go to 8 hour for a second. We've now broken down from this momentum trend line to the upside, and you can also see clearly on the screen that we were working on this ascending wedge pattern, and it has broken down, and that's very bearish on a breakdown. And so we not only have gone and broken down from this trend line, which is part of this kind of ascending pennant, ascending wedge. Let's see if I can, yeah. So you have a little bit of support there. If you want to make that a flag, that's fine. If that's the case, then that's, maybe I'll mark that. If that's the case, then that's still, maybe consolidating within that channel. If it breaks down, obviously that's going to be a big deal. But it has broken that initial momentum, and it's kind of meandering around some daily, weekly resistance and support lines. You can see here these blue horizontal lines. And so what I'm going to be watching on the DXY going forward is, are we going to continue down and work our way down either to this support line or to this ascending trend line? And so for anybody who's dollar bearish, what you're going to want to look for is for price to continue through, maybe bounce off this support before breaking down, bounce down off this support, break down, and so on. And it's possible this could happen pretty quickly. If you look at these, ever since the end of November of 2020, you've kind of seen these really sharp falls, and then when it bounces up, it comes down and has a really sharp fall again. So it could do that. I'm not saying it will, but it could do that. But that's the kind of thing I will be watching for. The other thing, to go back to this trend line that I darkened, or that I lightened up for a second, is if we go back to our daily, you can see a lot of people have been talking about this as kind of like a reverse head and shoulders. We haven't really had a decisive breakthrough of it. So if the dollar is going to show strength, and if this is not just a counter trend, brief counter trend rally, if we want it to continue to the upside, it's going to have to decisively break through that trend line and test it as support, something like this, and then resume off. So that's another thing to be looking for on the dollar. So just a lot of things to look at just in the dollar itself, and it's really important to see that, because it's really, anybody who's in the know understands that what's going on right now is that it's a dollar story. Over the last month and a half, you've seen the Fed meeting, you've seen a slightly more hawkish language, you've seen the markets react to that. There's just a lot of things going on. I think the macro backdrop is that it really is going to be dollar weakness, but you have to remember when it comes to the DXY that it's basically an index weighted against other currencies, and primarily against the euro. So even if the dollar is losing its purchasing power, it might be stronger than the euro, because the euro might be being devalued, and the Japanese yen may be devalued. Okay. And then before we get into the equity markets, I want to take a look at a few things really quick, because one of the things that's really interesting is if you are paying attention to Forex, then you really get a good idea of what's going on. And my Forex charts are really messy, so you have to forgive me. I have to kind of go through them again. But you can see here right around that same time, May 28th, you begin to see a sharp sharp towards the US dollar with the euro. And since the euro is 50% of the DXY, then that makes sense when you look at the DXY. But I want to take a look at something that's been happening over the last couple of weeks, and just to give you an idea of what's going on. The Japanese yen, right, so May 28th, you can see that right around here, we are basically sideways from there against the US dollar, Japanese yen. So that's something. But I thought it was interesting. It would be interesting to take a look at the Japanese yen versus other currencies. Start with some commodity currencies. So when things are risk on, when there's risk on in the market, you usually see the trade heavily towards the Australian dollar, the Canadian dollar, and the New Zealand dollar versus the Japanese yen. Usually a lot of long trades. But what you see over here is, after some sideways action here on the New Zealand dollar, Japanese yen, on the Australian dollar, Japanese yen, and even to some degree on the Canadian dollar, Japanese yen, you've seen price kind of roll over. And that's been very interesting to watch because you wonder, the Japanese yen has been very weak ever since the end of the crisis, when the Fed and other central banks began dumping liquidity into the market. Risk on has been the trade, and that long term, you see again momentum. That long term momentum is breaking on all of these currency pairs. Maybe on the Canadian dollar, because things have been changing with the Canadian dollar, it's a little bit different. But if you see here on the Canadian dollar, there's a much more shallow momentum to that. So that's something to watch in the future. But definitely on the Australian dollar and the New Zealand dollar, that long-term momentum is breaking. And so that's something to watch going into with the equity markets, right? So even if you look at the euro, Japanese yen, that also broke some long-term momentum. And then the pound Japanese yen has also broken some long-term momentum. Again, it's kind of like the Canadian dollar in this pair, because you've got kind of a more shallow trend line there if you wanted to look at it that way. The point being, is it just a simple strengthening of the Japanese yen, or is it something bigger to watch? Is there something looming in the equity markets? Because if you look at the equity markets now, we're at all-time highs. Today we've closed at all-time highs on the S&P 500. We've closed just about at all-time highs on the NASDAQ. The Dow, not at an all-time high, but still, basically near all-time highs, just a stone's throw away. And then the Russell in this sideways channel. So once again, you can see here in all of these charts my vertical line showing you where I last updated. What I remember, if you remember what I was looking for was, would the NASDAQ be able to get up to its all-time high and break its all-time high? Well, it did that. It's done that. I was looking at the same thing on the Russell, because the Russell is coming up. Now, the Russell has tried twice, and you can actually see here there's a higher low, right? So a couple days after my last update, we got up here, and then we have a lower high, and we're right now making lower lows, right? So that's something to look at on the Russell, right? Small caps. And then the Dow, the industrials, they are also kind of making lower lows ever since the very beginning of May. We've got consecutive lower highs here, and then 2 lower lows right here. And so what I'll be looking for is to see, will this come down and make a lower low and fail to kind of make a higher high up here? Or on the flip side, after breaking this trend line, will we come up, break the upper all-time high, and then resume up? And I don't claim to know, but I think just the price action on the Japanese yen, especially against the commodity currencies, the Australian dollar, Canadian dollar, New Zealand dollar, has me pausing here. I'm definitely not chasing this momentum. If you're trading equities, if you're trading futures, I'm not chasing the momentum here. Especially on the S&P and the NASDAQ. And that's what's really been interesting is, and they've been talking about this on podcasts and other channels like Macro Voices and all that the NASDAQ's price moves have been in large part due to the big FANG names, due to Apple, Microsoft especially, Amazon, Google, and so on. And so the NASDAQ's price action has been coming up pretty extensively as a result, and I think that's also why you see the S&P pushing its all-time highs, because the tech names are such a huge percentage of the S&P 500, whereas your industrials and your small caps, they're not sharing that same increasing price action, even though they're more sideways. They're not down; they're sideways. It is something to think about. And that the NASDAQ was kind of the torch carrier, the torch bearer of the rally ever since the March 2020 lows, is just outperforming all this time. Or I should say was the best performer for the most part until we started hitting these bumps in February and April of 2021. And also those, September and October of 2020. So I'm not really sure what to make of it. The one thing that I think has been helpful for tech has been this rollover in yields. This is another thing we were watching. I got some trend lines that I need to kind of get away from here. You can kind of see here that yields have rolled over. We were in this large bull flag for a really long time, and they've rolled out of it. We're making lower lows, we're making lower highs, and so that is good for the tech names. That's, I think, why you see, if we kind of look at my NASDAQ chart here, on the Qs, you can see that coming up, right? Apple, look at Apple at fresh all-time highs after having been mostly sideways for the better part of 10 months. Microsoft's been on a tear. Amazon again sideways, and has now broken out of that sideways action at all-time highs. Google on a tear, both Googles I should say on a tear, Facebook on a tear. So for these tech names, yields coming down is really important, and now I think we're at a really important moment for yields, because again, some momentum trend lines that I've got here, we've broken this momentum trend line that I'm darkening, and so this is kind of that last line for upper momentum. Question that I have going forward is, you can see we wicked down here. What I'm going to be looking for now is, will this hit the lower band of this flag and get rejected and then come underneath and resume lower? That's really going to be what I'm looking for on yields, and that's going to really inform whether or not what's going to happen with the NASDAQ. So kind of in summary, at least as far as equities are concerned, I'm really paying attention to what's going on with the Japanese yen in Forex against the commodity currencies, because that's a huge tell for risk on versus risk off. And I'll also be watching yields, because if yields continue lower, then I think the NASDAQ's gonna continue to rise, and I think that the Dow is going to underperform, and I think the Russell will underperform. Not to say that they won't still go up, but I don't think they'll perform as well in a lower yield environment, because that's really what we saw kind of all the way from the end of March 2020 all up until September, when yields started to turn. You see here that even though the NASDAQ did still come up since then, even amidst rising yields, it wasn't performing as hotly at that point as the Dow, right, or as even the Russell, which you can see here at around the beginning of September. The Russell really outperformed in a higher yield environment. So that's going to be the thing that I look for in equities. Let's take a look at gold. Gold was on a tear. I, very famously a couple weeks back said, when we were up here, I said, I don't think we're going to go back down. If you recall, if you've paid attention to my videos going back a long time, if you haven't seen them, you should go check them out in my playlists and things like that. But I was watching price. I was thinking price was going to actually come down. I had a box somewhere around there. We touched the box twice, and then we came up. And I think right around this point, I said, we're not going to go back down. We've been making too many higher highs. And look what happened. As soon as yields started to, it's very interesting when you see, let me go back to the yields really quick. Yields are coming down, and yet at the same time, so is gold. It's very interesting to me, because for a long time, the narrative was that ever since yields started to come up in August of 2020, you kind of had this kind of move down in gold. So a lot of people were saying, well, gold can't rise if yields are rising. And then you see right here in this section was around the time that yields started making that flag kind of kind of started consolidating sideways and all that. And then what's interesting is this price action right here is all since yields have crashed. And there's a lot to be made about what was happening with the FOMC, with the Federal Reserve and their decisions that they're making. It's really interesting to see, that with yields coming down, gold is also down over the last few weeks. But I think it's also related to the fact that the dollar itself is up. So we've got, in my opinion, we've got some conflicting things happening here, right? So you got gold, which has been coming down in the midst of also falling yields. And you have equity markets making fresh all-time highs, right, along with the lowering yields, at the same time as watching relative strength in the Japanese yen against commodity pairs, which suggests some risk-off moves. Let's take a quick look at silver. Silver is kind of pinned, kind of in this range, right? We've got this resistance and support range, and you could maybe like say that this should be maybe lower. Maybe this is a really large sideways channel. You can kind of see that price has really ultimately been sideways between here, ever since beginning of August. So you could say that my lines are a little bit more narrow. We've got a couple of lines to break before things start looking better. I do think that silver ultimately needs to get above this line at 28.35, but to start out with, it's got to repair this momentum trend line, then this momentum trend line, and then it can get above before it starts looking better. But the thing to watch is going to be, as far as gold and silver goes, it's going to be to watch the dollar and to watch yields. And so that's kind of where things are at with gold and silver. And then Bitcoin. And I was wrong. I thought that, let's see, where's my June? So I got rid of this box. I had a box kind of around here. I suspected that before we got out of June that we were going to return back up at least somewhat close to our all-time high, but I was definitely wrong about that. There's definitely some long consolidation happening on Bitcoin, and I'm not really sure what to make of it. I think that obviously, what we're looking at here is we've got this kind of box, and it shouldn't be green. My boxes should be blue, but that's fine for now. We kind of got this box of consolidation of this like supply zone where after, a lot of people looking at this upper part as a Wyckoff distribution. And if that was the case, I don't particularly buy it. I don't think it's that perfect. But whatever, each to his or her own. If this is a distribution, this looks like an accumulation down here, whatever the case may be. And to me, I still, I said on Twitter that I thought that at the end of July, that price will be, up at around 100,000. I don't know that that's going to happen anymore. We're already 9 days into July, and we haven't even, made a higher high from our June 15th high. And so not really sure what to make of it on Bitcoin, but so long as we stay above our previous all-time high, which was somewhere around 19,000 and a little bit more than 19,000, just under 20,000. As long as we stay above this blue line, then we're still okay. There's a lot to be made from some people on Twitter who have talked about the 1.618 Fibonacci level, which is, I believe, if I could mark my chart here, which I believe is somewhere in this vicinity, that as long as we hold this area, Bitcoin has never broken it once it has surpassed it during its bull cycle. So that bodes well, because you can also see that we were wicking around it and closing on our one-day chart somewhere in this range as well. So this, like I said, this green box that I put here looks like a good zone to be accumulating. And I think what's going on Bitcoin is something that it happens in basically in every other market as well. And I think it's something that everybody should really consider, because if you think about what happens up here, the market makers, the rich, what they do is they try to create a market to, like in this case up here, they try to create a market to sell into. Because if large institutions and whales and whatnot, if they dump everything right away, they would crash. They wouldn't be able to get out, because price would be getting away from them. And that's true when they're trying to sell just as much as when they're trying to buy. Because if you think about it, if institutions in this area just bought as much as they potentially could, if they threw billions and billions of dollars into Bitcoin, price would take off. It would accelerate. It would go parabolic. And so kind of the whole concept and what a lot of the Wyckoff people are talking about here is that in this case, the distribution phase, they're trying to create a market to sell. Because they want to take their profit, but they don't want to get out all at one time. So it is manipulation. It is something that is done in order to allow themselves to get out with as much profit as possible, right? Instead of losing profit on the way down as it sells, right? So then what ends up happening, what ends up happening kind of in this little zone right here, is you get that capitulation where all the institutions, all the whales have gotten out, and this is all of retail kind of selling down, and then this is where the institutions start accumulating again. And so it works the same way as in the distribution phase, except in reverse, where they're trying to create a lot of sell pressure so that they can accumulate, right? Because they don't want to buy higher than they need to. So that's why you see all of the articles in this about Bitcoin's going to zero, Bitcoin's a scam. I mean, you see that everywhere, but you especially see it here. There's just a lot of FUD, a lot of just doubt about what Bitcoin is going to do. People are about exhausted out of this, and I think that it's only a matter of time before we get back up. And as you notice, something that's going on here is we've got this trend line, these little trend lines descending are clones of this larger trend line. This is a trend line that I think people are watching, and what's interesting is even as price is going sideways, the trend line gets closer and closer. And I think that as many people have said, and people in CTM have been watching this for some time, that if we can get above this trend line, I mean, it's going to be on, and I think that's where you're going to see that rise. That has been long overdue for a lot of us, that we've been waiting on. And so I just gave a little bit extra attention to Bitcoin here because it's really important that you understand what's happening here, and that they're just like here, they were trying to create a market that they could sell into, right? Think about how many people, especially the people who were hurt and were leveraging, think about how many people were buying in here because they were convinced it was going to go to 1 million tomorrow, right? And now look at right here, how many people are convinced that, like I've been seeing on social media, how many people are looking for Bitcoin to break 30,000, to go down to 25, to 20,000, to 15,000, to 10,000, right? So in the same way that people were buying up here because they thought it was going to 1 million, now the sentiment is it's going to go down to 20,000 or lower. And so this is the perfect market to be accumulating in. So if you have the capital, not financial advice, this is where you should be accumulating, because I have my doubts. I've been wrong before about various things, but I have my doubts that it's going to be anywhere in this range, or that it's even going to go below 20,000. So over time, I mean, like if you just again look at Bitcoin over a span of time, and sorry about my messy chart, where has Bitcoin gone ever since its inception? Up, 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 up. If you've held Bitcoin for 4 years, you've never lost money. So there you go. That's something to just pay attention to. And that's all for this weekly market wrap. I hope you enjoyed. Please like, subscribe, and share. And I'll see you guys next time on Markets for Millennials.